fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. Now, today we have a very interesting day. We're starting a brand new OPEX after Friday's close of a very, again, interesting close on Friday, heading into a brand new month. If you don't know, I count my months by OPEX, so that's options expiration. So we saw that on Friday. Today and tomorrow is what I personally look for to give me an idea of what the next month's price action could look like, right? And there's some validity to that, but something I like to use. I like to look at the price action today and see where buyers and sellers are, see if there's any repositioning into the next OPEX or this October OPEX. Now, on top of that, we also have Q3 ending in September, obviously. So we have a lot of things to juggle here in the near term on what we could be seeing on the overall market. Now, right at 9 o'clock, we did have a little bit of news I wanted to go over with you guys. I found quite interesting. Fed Bostic, I believe that's how you say his last name, said, "I see little reason to cut rates further now," which is fascinating because we only cut rates a very little bit, 25 basis points. And the fact that anyone in the Fed is saying, "I don't see a reason to cut them any further," is interesting to say the least. You got a little bit of a reaction, as you can see on my chart here, off of that little bit of news. It was also exactly at 9 o'clock, so, take that with a grain of salt. But along with that, I do want to do our little roundup for our Catalyst Watch for the day on this beautiful Monday morning. Now, you do have a Fed speaker right around open. You have Williams at 9:45. And then midday today, we've got quite a little bit of a minefield. So the area of opportunity today, with the exception of Fed Williams speaking at 9:45, which me personally, I like to wait on Mondays anyway, that first 10, 15 minutes. So maybe extend that just a hair to maybe like 9:50, see if Williams is saying anything of note. But you also have Muslim. I can never say these guys' names, so don't crucify me. Muslim speaking at 10. So really your window of opportunity today is really going to be between 10 and noon. Very small window. And when I say window of opportunity on this program, I mean the period in which there is the lowest odd of random volatility, is someone coming out and saying something, whatever. And it doesn't mean you can't trade in other times, but you just want to take this under advisement in terms of your risk parameters, what you're looking at, when it's okay or not okay to trade, or at least in terms of sizing. Maybe go a little lighter, a little heavier during times of when there is or isn't any potential, again, random volatility, someone's speaking, right? So, off the back of that, today at noon, we've got three Fed speakers. 1 o'clock, we have a White House press briefing. In between all of this, also, you have European banking individuals speaking and the Bank of Canada speaking. On top of that, you got Trump today at 4 o'clock with his medical findings. He said apparently that they found something about what causes autism now or something like that. So really that shouldn't affect the market as a whole, but it could affect some medical stocks, obviously. Especially what I'm seeing rumored now is that they're saying Tylenol apparently can, if you take Tylenol when you're pregnant, that apparently can cause autism. So, I mean, you want to stick that in the back of your head. There could be a short play there. I personally won't take too much merit of how that would affect a stock. If anything, if there is a downside, so let's say Trump says something and it affects like Pfizer or one of these other big Merck, one of these like medical companies or drug companies, affects them to the downside, depending on how the chart looks, I would see that as more of a buying opportunity than anything, because we'll see. We'll just see what he says and go from there. And I'll probably end up doing a stream tomorrow as well, so we'll bring you up to speed on that. But I do want to take a quick fast forward through the rest of the week and just highlight any major things that might be coming down the pike for the rest of the week. And as we like to go through the week anyway, I like to keep you guys abreast to anything that could affect your trading. You do have a lot of Fed speakers throughout the week in general. Tomorrow, the biggest thing of note is you have Powell speaking right around noon at 12:35, scheduled to speak. Obviously, he's the most important Fed person, being the chairman. So keep an eye on that. Outside of the fact that we have all the other Fed speakers essentially speaking today. New home sales, so if you're exposed to mortgage or any sort of real estate kind of investments, you got that on watch on Wednesday. Outside of that, not much going on Wednesday. Heading forward to Thursday, you do have your GDP quarter over quarter and jobless claims, so you will see a little bit of a bump there in the pre-market around 8:30. Again, more Fed speakers. You got Williams again on Thursday and Bowman. And then more Fed speakers before close. 1, 2, 3 before close on Thursday. You do have Costco earnings on Thursday as well, so you're going to want to keep an eye on that. Definitely gives you an idea of the strength of the consumer. Costco, Walmart, Target, those are ones I personally look at to get an idea of how strong the consumer is outside of any other metric. I like to look at these three companies in particular to get an idea of how strong consumers are spending right now. And finally, on Thursday, you got PCE. And Michigan sentiment. As you guys know, I love to trade me some Michigan sentiment if I get the opportunity. So we have an interesting week. Most of the news looks like it's front loaded between today and tomorrow in terms of like potential random catalysts. Like I said, tomorrow you've got Powell speaking, and then today a bunch of Fed speakers just sprinkled throughout the day. Like I said, the main window of opportunity, and when I say window of opportunity, I'm saying the period of time in which there may be fewer bits of randomness, people saying something could affect your position. Either way, bullish or bearish, doesn't matter. Just the risk, right, is going to be probably a little after 10 and before noon. Outside of that window, you could hit some random volatility. When I say random, again, I mean someone saying something could affect your position, favorable or unfavorable. So it's not that you can't trade, but me personally, again, as I like to highlight in this program, I want to highlight where the risk is and where the risk isn't. Risk on, risk off. So the time where the market is less risky today, specifically if you're day trading, is going to be between that 10 to noon window. So at least keep that in the back of your head. Also keep in mind, it's a Monday on a brand new OPEX, so you do want to take this open very, very slow, at least in my opinion. Toby says, sup, Toby, good morning, thanks for popping by. Neegum with the good morning, my friend. Hope you guys are doing well. If you haven't already, guys, do me a quick favor, share out the stream, interact with me somehow like Toby and Neegum did in the chat, say what's up. Helps me out in the algorithm, so if you appreciate the show, just a little bit of interactions, all I ask for, and I'll be more than happy to do more of these. And if you haven't already, pop over to the YouTube channel. Once we hit 500 subscribers, this will be an everyday show. So if you do want this show every single day for both your eyes and your ears, all you got to do is hit subscribe, maybe tell a friend, and I appreciate your support. Now, moving on to the market. Right now, we're down a little bit in the pre-market. Nothing too crazy, down about $1.50. Going to, we'll look at the daily close and look at the weekly close. Let me get rid of my lines here for a second. On SPY, a decent daily candle on Friday. Left a tiny bit of a wick there at the top, but nothing too crazy. And on the weekly, decent candle as well. Now, I will like to highlight to you, or I do want to highlight to you guys, 1, 2, 3, 4, 5, 6, 7 weekly candles in a row. Also note that this weekly candle here is on higher volume. In fact, increasing volume the last 3 weeks as we've been moving up. It's not a bearish thing by any means. However, I will share with you that I did decide to open a credit debit spread. Credit debit spread, that's not a thing. I opened a put debit spread. I believe it was a put debit spread. Hold on, let me double check, because now I'm sounding like a nutty person. I did open a put debit spread for mid-October at Friday's close. Now, that doesn't necessarily mean I'm super bearish on the market or anything, because it's hard to be bearish with the market as strong as this. But do I see, again, some level of a pullback possibility? Yes. To be very clear, this is not a massive part of my portfolio. However, it is a means of, I hate saying it, hedging, because some people hedge and they hedge incorrectly and they put 50% of their portfolio in puts, and that's a no-no, right? And I will also tell you, I do still have a spread open, a call debit spread open, or not call debit spread, another put debit spread open. That's a swing as well, so that was also another cushion that probably at this point is going to expire worthless, and that's for the end of September, which is only next week. So that's probably going to expire worthless. However, that little bit of risk, which has ended up being 1.5%, 2% of my portfolio, had that played out, I had about a 5-to-1 or a 6-to-1 risk to reward profile on that. So meaning that 2%, we'll say 2% for simplicity, if there was downside, I'd have 10 to 12% in gains. Again, rough math in my head. Sorry, really 8 to 10% gains on that play alone. So even though my other equities may hit stops or may go down, that is a way where I can actually hedge correctly for this upside move. Because right now we're on a strong upside move. The bulls are showing a lot of strength in general, but seeing these many weeks in a row in general makes me a little trepidatious. And the fact that we're starting a new OPEX, I also saw the opportunity where we could see a downside over the weekend, which we are seeing currently right now. We saw a little bit of redness over the weekend, and we'll see how we open up, where there could be some level of a retracement. Again, nothing to freak out about yet, but this is a very day-by-day market. You can even look at the AEMA on the weeklies, around 644. On the daily, that AEMA right now is at 657, so even a few points here would be pretty decent. And depending how the bears react, right, if the bears show any teeth, then you can move ahead. So you either can close your position out, make a little money, or if it looks like the bears are getting more aggressive, then you can keep that hedge on and just consider moving up stops. Now, full transparency, last week I moved up stops on all of my equity trades, almost every single one besides 2 or 3 that I'll be long on for the next 10, 20 years or whatever. But most of my equity trades, I moved up a pretty aggressive stop on them, or at least aggressive by my metric, in case things went south with FOMC and OPEX and everything. And I'm going to keep those there because I can always get back in. And I don't mind realizing some long-term gains and getting back in and, making more money that way. So not too sad about that. Anyway, market's about to open. Eddie dropping the "you're" in the chat. You're right back to you, Eddie, and Hatchet with the good morning. Good morning, my friend. Hope you are doing well. Thanks for stopping by, guys. Looking at the market right now, we'll go over sectors here in a little bit, but the SPY right now, again, is only down about $1.50. Looking at the Qs, looking like the most strength comparative to small caps, which the small caps, I'll be honest with you guys as well, I was actually long on Friday and ate a decent loss on some calls, which just never looked like they were getting out of the gate, even though the SPY showed a lot of strength. So I'm very curious to see how IWM reacts, mainly because it's basically at new all-time highs here. Or not new, no, it is new all-time highs up here, and it's right around currently at my my LOI here, this 242.39, which I've said on this program many times before. So we're on this key LOI. We're opening on it right now. Actually, the market just opened just beneath it. So you're going to want to watch this level today as a potential short entry or even a long entry if we power over it with some strength. So this is going to be a key level in effect today for IWM. So keep a tight eye on that. All right, market's open here. SPY trying to get a little push out the gate here. Q's looking pretty okay so far. Volatility is up in the open, so keep that in mind. I will remind you all, today is the start of a brand new OPEX. So for what that means for me, for today and tomorrow, that means that we want to be a little bit more careful. You tend to see some repositioning, not always, but you tend to see some repositioning on a new OPEX where people start to move things around. The only thing that makes this a little bit more different, and obviously it's a quarterly thing, every quarter, that OPEX, so in this case, October's OPEX and December's and what was it, January, February, March, every quarter can be a little funky to read. Mainly because there could be some window dressing, right? If you don't know what that is, it's when the end of the quarter looks really, really nice. A lot of the hedge fund managers want their bonuses, etc. So you could see a little bit of false signaling there as well. So you do want to keep that in the back of your head. On top of that, it's a Monday. So like I've said, I think 3 times now, you do want to keep this open. I know the market just opened. You're excited to trade and everything, but you do want to let the open kind of do its thing. And I promise you, you'll more than likely be more successful than not. Looking already at the market and how we're opening right now, we're seeing a clear divergence early in the open here between small caps and tech right now. Yeah, so you're seeing a clear little sell-off here on IWM. So you do want to be careful on your small caps today. I saw a lot of hype on social media this weekend around small caps, and while there's nothing wrong with that, the Russell tends to always underperform. And when it's small cap season, it's great. You want to be involved with your small caps. But a lot, and I'll be honest with you guys again, a lot of my personal portfolio is actually in medium and large caps, some small caps, but mostly medium and large cap companies. because of how much of a low ride IWM has been on lately, and because we basically tapped new all-time highs and came back down, that's why I tightened up those stops specifically, because there could be a period of weakness here. And if there is that period of weakness, I don't want to be bag holding a small, medium, or large cap name when I could just get back in even at a better point in time, because a lot of them have run pretty good. Let's check out our friend Grab here. Grab, like I told you guys, as long as it closed out the week above 591, it's still looking pretty clean, and it is. We closed out the week all the way up here at 639, reached a high of 650. Your next trigger point here is 661. So I do want this to cool down as long as you're north at 591. And if you're playing equity, you can put a stop up even at like 5. The old all-time high was 572. So I would probably consider like 560s to 572-ish. That would give you at least a little bit of leeway there if we come back and back test that before going higher. Now, you also want to let your EMAs catch up here on the weekly and on the daily, which we're starting to catch up here on the daily before another tap and run here, at least in my opinion. But again, managing your risk here, if you're long on this play, like I've been long on this play, both in leaps and in shares for quite some time now, this was the move we've been waiting for here, again, on the daily, on the weekly, on the monthly, and what we're looking for here essentially is a continuation above 591. So some period of consolidation here would make a lot of sense, but if we don't see that, it's not the end of the world. Toby says, yay, dog. Did the dog walk behind me? I didn't notice. He likes to randomly pop in. He'll drop his 2 cents every once in a while. And not much happening here in the open thus far. Again, clear divergence here. Look at this right now. Look at the Qs. Straight up, IWM straight down. So we're seeing a clean divergence between our small caps and our tech names right now. Qs trying to go from red to green on the intraday chart here. Let me check something real quick. All right, so don't forget we got William speaking at 9:45 at however you say this guy's name, Musalem, at 10. Sorry if I butchered your name, Fed Muslim, because I know you're clearly watching the Atomcash angle. Why else wouldn't you be? So I know I deeply offend you as you watch the show. Not seeing too much right now or anything really of interest. I do want to highlight this name. I don't know if I spoke about it on the program. This is a name that I provided to our community over at Exclusive Trading, VNet. This is a name that I'm personally long on. I've been long on. Not for terribly long now, but I did get an entry around 808. Currently trading around 1030. So this for me is up right around like 27, 28%. Really solid chart here. I got in right around this LOI, around this 809 area here. Nice break to the upside. These are the kind of names you want to keep an eye out for. I see a lot of people, again, on social media, putting out a lot of these, like if you are trading a smaller mid-cap name, look for bases like this that are above your EMAs and your MAs at key levels of support and resistance. I see a lot of them posting names, for example, like VNet, that have already moved. And that doesn't mean you can't make money on it. Obviously, I'm looking to make more money on this name still. But your risk changes. So just be cognizant of that if you do get into one of these names that's very trendy. And be careful of that, because again, it doesn't mean you can't make money, and it also depends on your time frame. For example, this is a stock I'm in shares right now, so my time frame is very different than someone who may have weekly options, right? So you may look for more of a specific move here, but if you are someone who's trading the momentum right now, as we're in I would argue, starting to get into like a momentum heavy market, where some of these smaller mid-cap names, like I said, are moving just pretty quickly, you do want to be very calculated with your approach. So I did want to highlight this name because it's a name I like and still like for even higher. I don't want anyone to FOMO into it, but if you do like this kind of name with this kind of exposure, getting around a 966 Riyadh isn't a horrible idea unless he just powers through this little gap here at 1069, in which case I'll be a happy camper sitting on probably like a 30 to 35% gain, which would be nice. Heading back to the market. Again, not much to see here. Really holding the AEMA at the open still, but not a ton of strength. And obviously this is not helping with IWM selling to the downside right now and the Qs moving to the upside. Let's look at our big names right now and see if there may be some opportunity. NVIDIA pretty tight on the open, moved down. So you're all the way up here around like 176 prior to the open, shot back down at the open, got just shy of 175, back up under 176. This is signaling to me this might be a kind of a range-bound day on NVIDIA, looking like it'll probably sit around 175. That's kind of supported by how the daily chart is looking, kind of condensing here quite a bit, making lower highs, making higher lows, kind of. Not really making higher lows, but in the case of the whole trend here, yes, making higher lows, and really tight. Look at all of our EMAs and MAs right here. Now the 8, the 13, the 21, and the 50 MA basically on today's price. So really, really, really tight here, and the POC at 176.31. So unless there's news, I would not bet the farm on NVIDIA today either direction, mainly due to the fact that it looks like we're going to get pinched here and just come sideways, kind of choppy action. Now, I will say, if it does break this POC on the daily, you may want to look for over 176.67. So that POC is 176.31, 176.67 is the close on Friday. So that's your weekly close. It's also your close on Friday, obviously. So getting above that, you could see some momentum come into NVIDIA, because then you're going to be above all those short-term EMAs plus the POC on the daily. I will also remind you, though, this is a high period of liquidity here. So for those of you that do trade NVIDIA, and I'm mainly saying this for those of you that intraday trade contracts, stuff like that, I would probably stay away from NVIDIA today. Because it more than likely is going to get pinched sideways throughout the day. Before the program ends, we'll see if I'm right. But the way it's sitting right now is looking like a market maker's dream to collect some premium, in my opinion. That's what it's looking like right now. That could change, but that's what it looks like, at least in the early goings of this morning. Microsoft does look a hell of a lot better. We came down to that low. We fuddled around that 500, 505 area, and now you're seeing a lot more wider price action, I guess I should say. You're above all EMAs, every single EMA and MA, so it's showing the trend is actually starting to shift back bullish, and a huge volume spike on Friday. That volume is the highest volume in since the 5/1 earnings. That was a big spike in volume. You had 52 million shares on Friday, so a lot of volume come through, and a decent daily candle as well. So what I'm personally looking for here is, if I do open a long on Microsoft, I want to get back in this little nest here of EMAs and MAs. You can essentially look at the 50 MA, 511.42. That I'm looking for a short-term trade, so like this week. So if we do see some bearishness come through on Microsoft at any point this week, and we're tapping around that 50 MA on the daily, I'm going to want to take a stab. Maybe with well, today's Monday. Is it technically a 14D? What is it? How many days is that for next Friday? 11 or an 18. So either next Friday or the Friday after. Give me a little bit of time, because there could be an opportunity here where we calm down, we bounce, and we rally short term. Now, that's not excluding how the market's looking right now. Like I said, it could be a little shaky here near term, but as we're seeing today, tech is showing more strength in comparison with IWM, which kind of gives you your sentiment, right? How all the other names are trading that aren't tech names, right? So seeing the Qs hold up better than IWM, and SPY conversely just kind of being sideways as a result, lends me to believe that if we do see a period of weakness here for Microsoft, there could be a buying opportunity around that 511 area. So just keep that in the back of your head. Now, Apple has been on a little bit of a monster move here, currently up about 2% on the day, putting the whole stock market on its back as it's done in the past, gap up and push on Apple today. Now we're in a place where it might have to start to cool, basically right around, literally right here at 250. Nice whole number, right, for psychological purposes. But you got these wicks here back in, what is that, February? On the weekly, where we're showing a level of resistance before firing to the downside here. So it would make a lot of sense here, because this weekly is a little overstretched, a little hot. The daily, obviously, we gapped up here, that this gap fills this week. Now, it may not necessarily be today, but that the gap on Apple, this gap up, is actually faded and actually fills this week. So I would want to keep a tight eye on that, just because of how the weekly chart's sitting. I'd be very, very, very cautious trading long Apple or being a bull on Apple. At least, again, we're talking very short term here, because this is a very strong move after it got this nice big candle here on the week. Consolidate, break, and push again. Up through 3 of my LOIs. Now we're gapping up. This looks like it could be exhaustion to me, because you're gapping up into resistance. And now probably needs to cool a bit. So sorry if any of you are long Apple traders, but that's what this is looking like. Again, at least in the near term. Now, I will say this monthly looks badass. This monthly looks really, 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 really good. Look at these last 4 monthly candles here. So you shot, we'll go back a little bit in the past. Shot down a bit. You had some of the tariff drama, pop back up. Actually, didn't even pop up that much. Pushed down the next month. So you had a period of a month or two here where it just kind of sat around a little high of 200. Had another month where it was kind of like, meh. And then these last 2 monthly candles, including the month we're currently on, are bars, as the kids say. They are bars on Apple. And what excites me the most, as you guys know how much I love my SAR indicator, look at the monthly SAR indicator here on Apple. That's currently sitting at 251.28, so that could break today. Now again, that is on the month, so that needs time to work. But what I like more about this is that your MACD is starting to curl up and you're holding bull momentum. So that can set up for an explosive monthly move on Apple, much, much higher. So I would watch that SAR level at 251, whatever I just gave you, 251.28, and that all-time high, 259.18. Getting through those two levels here sets you up for a monster move potentially on the monthly. So Apple's not a name I would short medium term. This week, you may have a period of weakness. You may have some level of a pullback here, again, to fill this bear gap on the daily. But if it can sustain basically above this today's opening, or today's high, then it could move much, much, much faster. So what I would personally look for, filling this bear gap, that bear gap fills at 249.60, sorry, 246.30 on the fill, and I'll even put an alert here. I'll put an alert a few cents higher. Create an alert below. There we go. On that fill, that's where I'd look for 2-3 week out calls on Apple, because, or even a swing, like a longer term swing. And this is all depending on how the market looks and how volatility looks too. So depending on your risk, that could change. But the daily is looking good. The weekly is a little overstretched. That's why I said if we can cool and chill for a little bit, that'd be nice. But the monthly has a lot of potential here. Even shares, you'd probably make maybe like 15-20% if you're targeting like 300, next big psychological level. So I like Apple quite a bit. It's not ready yet, but it could be ready. So we'll see. Meta's also over that level I've mentioned to you guys many times before, basically 777. And it's not really going as hard as I want it to, honestly. It really is not. I'm more nervous about Meta here. What the hell is that? Let's get rid of that. Mainly because this weekly is looking a little tired, unless we get a strong push here. And the daily as well is looking like it could get a little tired here. I would personally just stay away from Meta at this point in time. Not long, not short. I would just steer away from Meta, me personally. Google, again, I will continue to remind you guys as you watch the program, Google is your canary in the coal mine. This is the one that tells you when Google starts to go bearish, all your other Mag 7 names are probably going to either already be bearish or they're going to hard push bearish. And I've said this now. I entered over here. How many months has it been that I've been telling you guys? And if you watch the program, you know, at least for the last 3 months, I've said Google is your canary in the coal mine. If Google sees a period of bearishness and actually gets below these EMAs, which is just pushing, this is going to be your definite sign for a near-term correction, potential bear market. And we're talking literal terms. So a correction's 10% on the market, a bear market's 20%. It could literally be in a week, right? It could be a very short period of time. But if we see Google start to move down very bearishly, I'm willing to bet a lot of the Mag 7 will already push more bearishly. And as we talked about already, a lot of them are more set up now. In the last like 2 or 3 weeks, things have changed a bit, where I was leaning more bearish and now I'm leaning a little bit more bullish as we're looking at these, because the opportunities are there to go harder into the end of the year. I do still think we need a period of weakness, some sort of correction before we get a hard like Santa rally into the end of the year, which is still my goal. I still want to see some level of correction on the market. Now I'm starting to theorize it maybe mid-October, and I'm not trying to move the goalpost with you guys, but as the market changes, we update our thesis, right? Things can change, and a good trader is willing to say, okay, this wasn't necessarily right, but let's see where the opportunity could lay. And that's what I'm doing with you guys live. I'm telling you, it's looking like depending on how today and tomorrow go, that September could be, or at least I should say, the end of the quarter could be kind of nice. And then heading into October might be that period of time where we see fast bearish weakness. And I don't mean a slow grind down, but quick bars dropping. We're down on the market 10% right away. And then a quick reversal back to the upside. Now, that is a big fall, mind you. 10% puts us back at 600, which again, my target for the correction is around 610. So it's still possible. Toby says, wait, Vina is Chinese. Adam, how could you? Toby, I hate Chinese names, as you know, but I actually traded Baba recently too. And I kept that thing on the tightest of leashes because I don't trust Chinese names in general. So it's as long as you keep them on a very tight leash, and I will not go very heavy. They're okay. I will say very, very carefully. But I do not, as you know and as you said, I do not like trading Chinese. Oh, Toby, I do want to talk to you specifically, since you're watching right now. I believe you requested eBay, and I made it into a little video on the YouTube channel. I am long eBay now. I went long, let me check my log here. I went long around 88.40. And this was the opportunity I was talking about here where the risk reward made a lot of sense on eBay, and we spoke about it live on the program. And I'm highlighting Toby because I think Toby was the one who mentioned it and wanted to ask about the chart. So we looked at the chart together on the program, and I said basically wait for the retest here, and as long as you're putting a stop in below this earnings gap, you have a pretty tight risk to reward. Now we're actually at my first price target, right around my first price target at 92.45. And you're starting to put in a little bit of reversal here, which is why I like the risk to reward scenario in this case, as long again as you're managing the stop here on that earnings. Now, this is not one that you could be late, or this is not one that you are missing out on yet, I should say. This is still pretty good risk to reward, even at this LOI here. In full transparency, I'm only up 4% on equity. But this is still solid risk reward in my opinion, as this chart now looks even more confirmed to push back to the upside here. Over this 92.45, we do have basically a confirmation of a bullish reversal here. You may need a little bit more gas in the tank to get over like 94.50-ish, but over that, you're looking pretty solid. You're going to be above all your EMAs and MAs, your MACD's flipping, you've bull momentum almost. Like I tell you guys, I like to look for like 54 on the RSI. You're at 53, right? So almost there. You broke your daily SAR. This is looking pretty solid. If it can get over, again, like 94.50, there's like your clear confirmation. You got a decent amount of upside here. This isn't exactly right, but at least to this point, even if you got in now, here, let's see what happens if you got in now. 92.33. 92.33. Assume a stop there. Let's assume take profit at, what price target is that? I don't know. I can't see my chart. 101. 100, 197. We're gonna do this. We'll do it live. 101.97. 101.97. So even if you got in right now today, assuming a stop loss under the earnings gap here, or just under the earnings gap, that number I use for stop is 86.95. Now, full transparency, I tightened my stop on this name, so I have stops in profit. But if you want that same risk, you could take that risk. You're only risking about a 6% downside for a 10% upside. That gives you a little bit over, almost a 2-to-1 risk to reward. And again, obviously, if you tighten that stop, let's say you tighten it to maybe the bottom of this candle, 87.85. You now have a 2-to-1, and let's say you want to go even tighter, maybe at the top of this candle here, 90.38, 90.38, 90.38, 90.99. Well, that's fine. 90.21. Now you've got almost a 4.5 to 1 risk to reward scenario. So you're only risking 2% downside for 10% upside. That's awesome. Those are the awesome kind of trades you want to look for in this market, where you have very low downside and much higher upside, especially on a quality name like eBay that had a period of weakness. You get in, you can make some money. This is a solid name. That's why I'm highlighting it again to you guys, because again, full transparency, I'm already long and I'm already in profit about 4 or 5%, but I do still think there's additional upside opportunity here over that 94.50 area, where you're realistically going to get at least 10% on this name if you entered like today with a manic stop. Again, you're only looking at 2% downside. I think it's a quality opportunity for you to consider if you like that idea. Let's go back to the market. Toby says, nice day for eBay, 90. 40 average. That's pretty solid, man. 90-40, you're right here. That's good entry. Solid entry. In a day or two, that 50 MA is going to be above you too, so you can even use the 50 MA as a trailing stop and you'll be set. Not too bad. You have your stops in profit, you'll be golden. SPY moving up here over this LOI, this old all-time high at 663.05. As you can see, Qs are still the continued strength in the market today, while IWM has had a nice little V-bottom back up real quick. Now you're at this key level again of 242.39. I'm tempted to take a short. I know this looks strong and everything. I'm very tempted to take a short. Very, very tempted to take a short. Clearly, IWM is the weaker, I don't want to say sector because we're not looking at sector, but the weaker market comparative to the NASDAQ today. I'm going to wait because obviously this could just squeeze on high volume. There's a lot of short interest out there right now, and you do not want to be on the wrong side of that at all. So you could see some squeezes happen across the board on a lot of these small cap names. So that's why I said you don't want to necessarily be rushing into a short. But it's something that piques my interest here, especially on this kind of momentum. But if they keep it up, hey, I won't take the short. Because right now you're pushing, you're above all your EMAs and MAs on the 1 minute here. It's a little hot, so that's why I said I could take a short, but we're going to wait and see. It is 9:53. Let me double check if we had any news in the meanwhile that may have perpetuated that kind of move there. And again, we do have Fed speakers right now, so just keep that in mind. This came across the board. Hamas has asked Trump for a 60-day ceasefire. I did not know that we were at war with Hamas, and I'm not trying to make anything political. I did not know. I thought that was a whole Israel-Hamas thing, and I guess unless we're supporting Israel, theoretically. Again, not trying to get political. I'm just saying what I'm reading. That's interesting to read. I'll look into that later. Oh, nice. We're getting some nice spam over on Kick and on Twitch. Thank you to the spammers telling me that I can grow my stream with their crappy service. I appreciate you guys. Not that they're actually listening because they're bots, but... It's looking like everyone's on board right now. So this is looking better. The Qs are clearly and have been bullish and holding bullish. IWM is trying to. What I want to see here, so if I'm a bull... come back down and reaffirm this 242.39 as support. So kind of like consolidate here, then go again. I don't want to just keep ripping. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 green candles in a row in the 1 minute. This is also a pretty healthy rip. About a buck, almost $2 within 12 minutes. That's a crazy, 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 crazy catch if you caught that. Because it is going so far. Let's look around at our big caps again, our megas. NVIDIA, like I said, is looking like it's going to get pinched here. So not good opportunity on that name today. Microsoft is also fairly tight. Interesting. Apple's grinding to the upside still. Again, I would exercise caution being a bull on Apple today. It's already gapped up. It's up 2%. And you're on a weekly resistance here. So I would actually, if anything, tentatively lean more bearish on Apple on the day for that back test, or at least for the gap fill, and then whenever that gap fill happens, so like this week, before being a bull, unless we like power through, basically the high a day is right around where that monthly SAR is, and right now you might do it. So unless we see a lot of force and power and volume push through that, you may want to exercise some caution here, because this could just be basically the high of the day here on Apple, which is, again, another tempting potential short, but it's like right now, if you're trying to short, you're kind of picking up pennies in front of a steamroller. You're betting against the trend, and even though we're at a key area where I personally would typically take shorts, and for those of you that follow me or you're in the Discord or whatever, especially on the index, I'm very accurate when I take a short position, and it's typically because I have very specific parameters I look for. Stuff like this is like, I'm itching to potentially take a short, but it could just power through and rock my position pretty hard, which is why I don't want to do that. That's why I said you're picking up pennies in front of a steamroller. Like, okay, I could make money, but I could also get steamrolled. And I'd rather not get steamrolled. I'd rather make money. So I'd rather take the cautious route and just wait. I could be right, could just go down. But if I'm not right, then I don't want to get rolled effectively. Hey, real quick, if anyone's watching on YouTube, can you just drop something in the chat? Because it looks like the stream may have dropped on YouTube. So if anyone's watching on YouTube, you can just say hi or something. Just let me know, because it's looking like it might have dropped. And if it dropped, then I got to do something real quick. So if you are watching on YouTube, do me a quick favor, drop a hi or something. A what's up. Or stock that you want me to look at, whatever, if you're on YouTube. Appreciate it. And I know this is on a delay, so I'll wait a minute. And see. Toby dropped this up. All right, cool. So we're still up on YouTube. Okay, sorry about that. I just kind of want to watch Apple here, honestly, with you guys. I want to see if the Bulls break this. If the Bulls break this on Apple, we're going to push pretty solidly, in my opinion. Okay, cool. Thanks, guys. Appreciate it. Everyone dropping the we're good on YouTube. Thank you, thank you, thank you. Thank you, Strange. Hey, Cody. I don't think I've seen your name. Thanks for hanging out, brother. And hash it with the it's working. Michelle with the hi. Hello, Michelle. Thank you for dropping the hi. Okay, so now I know next time if I want you guys to talk, I'm just going to ask you guys to say something in the chat because the stream might be down. So I'll tuck that away in the back of my head. But if you guys do want to drop any ticker names, feel free. I like doing that with you guys, especially on a Monday, especially on a new OPEX. We take a peek at things and see if there's anything of interest, especially as we're in this new month here. This is so close here. I'm itching to take a short. I really am. But like I'm telling you, if we break this high, it's gonna move. It's gonna go. Oh, Cody, you are a Lone Star Trader. Hey, brother, welcome, man. Thanks for popping by. Eddie with the male genitalia in the chat. Always good for a laugh. We are about $1 off of all-time highs on the SPY right now. Apple's trying to break that. I will remind you, this is where I typically take a short. I'm not doing it, but I typically would. Because I'm not trying to bet against momentum here. Because I could be wrong. And when I take a trade, I want at least 85% confidence or 90% confidence. I would have like 60% confidence on this, which is why I'm not putting my money where my mouth is. Because if I want to make money, I put my money where my mouth is. You have good momentum still. You have 66 on the bull side. And your MACD could curl and push this. Oh, man. Toby says snap on the daily, building higher low, and then maybe trade. Oh, this is a name, Snap. So we'll take a peek because I'm seeing a lot of people talk about it on socials. I'm just seeing if my gut, my 60% gut would have been right on Apple here. Realistically, I'd look for the back test of the POC. If the POC broke, so the POC right here is around this like 250-50 area, I'd look for right around here at like high 249s and then ride the rest in runner. So it wouldn't look for like a massive move, but enough where I could just kind of chill. We'll look at Snap in a second. I do want to highlight Grab back at 641. Decent daily candle here. Again, I would prefer if we cooled off just a bit and consolidated before a move higher. Again, your next trigger here is 661 to initiate further upside. We are starting to see declining volume. Granted, volume has been very high in this push, and volume is still good, but some declining volume in this area. So I would treat this area around like north of 640, sub 650 as a potential spot of liquidity where we could see some, not necessarily bearishness, but people taking profit essentially. Toby said Twitter is on it. Screw it. We'll take a peek. There's one very popular. All right, I'm gonna speak in code because I don't like to. Toby, come on, brother. On the daily chart, wicked the 200 MA and shot out of a cannon to the downside. I hate that. I hate that. I'll say it again. I hate that. Ugly. Gap up, tapped, shot down in another gap, mind you. Did the gap technically fill? Low 922. And the gap filled. So this gap from 8.5 filled on a 200 MA tap on the daily and now moving lower. If anything, I'd be a bear. Just on that alone. Now, it could just kind of grind higher. I don't know if there's news. We'll take a peek. I'll give you more of an in-depth look, but that was just a quick overview. And by the way, anytime you see class action lawsuit filed against a company, it is more than likely not going to affect the company. This happens all the time. Don't be like, oh, it's mega bearish. It's nothing. It is genuinely nothing. Is it because of the TikTok deal or something? Yeah. Short term, yes, that's why I wanted to build a higher low, right? Okay, so one thing I'm gonna say, and again, I'm gonna speak in code because I don't like to hang anyone out to dry necessarily. But there's a very large influencer on X who is consistently pushing this company. And there's nothing wrong with that if you like the company, especially one like this, because this one is, it's a big company. It's 14, or you can't see that part of my screen, but it's $14 billion market cap. Obviously, this individual is not going to influence the price action of Snap in any measure. Just like I, with my 55 years, am not influencing the price of Grab, with it being a $26 billion company, which is actually bigger than Snap. So I'm not saying that there's any kind of tomfoolery with influencing price. So let's get that out of the way first, because I don't want anyone to think that. I will say this individual was flagged by community notes, and some of you might know what I'm talking about, and mainly saying it because it's hilarious. But the community notes flagged them for having a Discord room, scamming all of the people in the Discord room by not providing any service at all, and then opening another Discord room. Because he sold lifetime memberships to one Discord room, said, okay, I'm done with this, and then opened a brand new Discord room. And it is a very, very big X account. The reason why I'm saying this is you want to be very careful who you follow, okay? And you want to be very mindful of the individuals that you follow in their ethics. If you look at someone like me, happy guy, talk positively, not trying to kick anyone while they're down or anything, but a lot of the people who are very positive and who act very positive or portray themselves as very positive typically are better people. The ones that are a little iffy are the ones that tend to pull down their pants and take a poo-poo on everyone. That's what you want to be careful of. Just being frank. Someone said it in the chat, so I'm not going to say it. But yeah, it's kind of funny. The fact that the community notes over there were funny. That's all. Anyway, let's take a peek at Snap and see what's going on here. So as I alluded to, we just tapped the 200 MA on the daily, and we did also fill this gap from August. So as I said a little bit earlier on the program, this is a name that's been getting a lot of hype on social media. Now, you did build a really solid base here off of my 708 LOI down here. Harsh move up on some volume here. This isn't awful, but it's not great either. Especially on the daily here, this is looking like you're in a gap and a gap. So you gapped up to fill the gap, and now you're in another gap that's forming right now, right? So not fantastic, especially a move like this on decent volume. So we'll see how today plays out. But I personally, if I wanted to get into this name, what I can see in terms of price action happening is coming back down and retesting like this 850-ish area, which would effectively fill this gap from today. And ultimately kind of chop along here where the 50 MA moves up and the 200 MA moves down, what I like to call on our program a sandwich, where you have a longer term trend pushing up against a shorter term trend. So in this scenario, what I would use if I was interested in Snap stock, I would personally look at an entry around 850-ish. That would fill the gap here on the daily, and I would keep a tight stop using the 50 MA or my purple line on the chart as my stop point. As time goes on, you're going to see your short-term EMAs and MAs, so my light blue, my light green, and my pink line on the chart start to move up to the upside and act as some level of support for this momentum name right now, because it is a momentum name at the point in time. That will give you a little bit of support to continue pushing to the upside. I will say, once this 200 MA breaks, you more than likely will see a decent reaction to the upside. You do need to see follow-through, though. I'll say that one more time. You do need to see follow-through, though, because you can have a scenario, for example, this is a great scenario right here, like this back in whatever the month that begins with a 7 is, where you kind of fluttered around it. You got a good break here, looking great on 722, and shot down, tapped it, failed it, and then you went through hell and failed on earnings, right? So you don't want that scenario. So when that 200 MA does effectively break, you want to see follow through. I consider follow through about 1 to 3 days, depending on volume, and looking at the daily chart here. 1 to 3 days, depending on volume, on a confirmed break where there might be more upside and I feel more comfortable. Again, using that 50 MA as a stop right now, let's actually get an idea. If I got in, So assuming, and I have no position on Snap right now, just full transparency. Assuming I got in around 850. So let's say I entered at 850. It stopped around, let's assume the 50 MA would be around 830. And let's look at this price target for 11 bucks. Because that's my closest LOI in this chart. So at that point, you have a fantastic risk to reward if you're willing to wait. So if you're willing to wait, you've got a 12.5 to 1 risk to reward. You're only risking a 2% downside, which actually puts you right on the 50 MA. So that was a good guess by me. It puts you at a 2% downside for almost a 30% upside. So I like this name only on again, an 850-ish entry with a tight stop at around 830. You give it a few more cents if you want, but you don't want, here, we'll go 818. It still gives you an 8 to 1. You're only risking 3% downside for almost a 30% upside. I will remind you, though, how it reacts over that 200 MA could change the whole course of the trade, where you may want to take profits a little bit early. So let's play around. Let's say you got at around 950. That's 949. So even if you got in at 850, you put a stop even lower. So this is really conservative metrics here. We put a stop at around 818, and we're playing basically for the 200 MA tap. Maybe it wicks above it, whatever. So basically to 949, right? You still have a 3 to 1 risk to reward scenario, which is pretty solid. So I do like Snap under these conditions on the daily chart. I do not like Snap at its current price because here, let's play a game. We'll move it up to, right now we're trading at 893, so we'll move it up to 890, and I'll assume an 850 stop, right? The gap stop. Now, assuming only pushing over the 200 MA, now my risk to reward is only 1.4 to 1. I'm risking almost 5% drawdown for 6% upside. Not good risk to reward. So if 850 taps with a tight stop, this is a solid play in my opinion, just looking at the daily chart. And playing for a break of the 200 or at least a retest, because again, even on a retest, we'll move this back down to 850 again, 818, boom, and then up here, you still get a 3 to 1 risk reward. So decent trade in my opinion, if you get the correct entry. With a bad entry on this one, you could get burnt because it is moving on some decent momentum. Now, I do want to take a look out on the weekly here. Just to see what this looks like. You did crack your weekly SAR on this gap up here. You're flipping your MACD. You're starting to maintain bull momentum. So you have the first early showings of an actual bull reversal. But I do want to zoom out here and show you a little bit. This purple line on my chart is the 50 MA. And it has been consistently rejecting that 50 MA ever since you had this really, really hard break last August, where it's just every tap here, reject, tap, reject, tap, reject, tap, reject, tap, reject, tap, reject, tap, reject. So this might be the area on the weekly that you'd want to consider taking profit, which is at 954, which is what I was saying, around like that 949-ish area. That's just a hair above the 200 MA, so it might wick above it, or at least tighten up stops at that point in time if you got the 850 entry. And the monthly is looking like you're trying to put in a decent reversal here, like an engulfing candle, which would be awesome. Hold on, let me get rid of that real quick. But for that to happen, you got to close above 955. So this is actually on the daily, on the weekly, on the monthly. That 950 area is massive. So I will refresh what I'm saying here a little bit. You could also consider an entry on the 950 break if it's sustained with volume. Otherwise, the bears here actually have better risk to reward to get this downside fill, at least in current price. Or you have a good risk to reward on like an 850 entry with a tight stop. So that's my little quick analysis here on Snap. Let me know what you guys think. What do we think, guys? Hack just says, beware of people. Hold on, let me do this. Beware of people who can't turn off all caps. I agree. I agree. Snap doesn't look bad. I'll personally even set an alert. I'll set it for 854. Whenever I set an alert, so here's a little lesson I could teach you guys that might save you heartache. If you're ever setting alerts, so in this case, like I said, I wanted an entry around 850. Always set it a few pennies earlier because you don't know what you're going to be doing when the alert fires off. You might be making lunch, you might be busy, you might be in another trade, whatever. Set it a few pennies earlier so that way it's at least on your radar. It goes, oh crap, it's on, like, oh, I got to check that out. But you don't have to go right away because it's not the point in time where you want to like buy right away. You want to reassess and see if the trade is still valid. So put the alert a few pennies. Like in this case, it's a few pennies on this name is a decent move. But move it if you're on a bigger name like an eBay or whatever, or an Nvidia, maybe $1 or something, where it gives you time that you can pull up the chart, time to assess and see if you want to actually do something before that actual point in time where you may want to trigger the trade. In this case, like I said, 850. So I put the alert at 854. Gives me a little time to pull up the chart and see if it's still valid at that point. So I would heavily suggest considering that. Subi in the chat says, I'm kind of worried about this guy Hatchet. Oh, I love when you guys are having fun. That's what it's all about, baby. That's what I like to do on this show. We have a little fun. We got a laugh or two. We look at a good stock opportunity. We highlight all the things and everything. Keep it interesting. We don't look at red and green lines and just go, duh. We kind of keep it fun. Keep it light. Exciting. Curious on what the IV is today. Options seem to be more volatile today. Let's take a peek. So I'm assuming you mean on SPY loan. Let's take a quick peek. Actually, you're incorrect. IV is actually half as high as it normally is. Or, yeah, about half. So IV is much lower. At the money IV right now on the SPY, between 9 and 10%, where our IV, our 52-week IV right now is about 15.5. So IV is actually much, 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 much lower. You guys can't see the pop-up on my screen here, but implied volatility percentile, so your IV percentile, right now we're in the 29th percentile. So that means 71, math, 71% of the time in the last 52 weeks, IV has been higher. So we're actually in a very low volatility period right now for the market, all things considered. I also want to highlight our HV percentile. So our HV percentile is our historical volatility. So that's the volatility of the underlying. So in this case, just SPY. So we're not looking at the options chain, which is what IV percentile will look at. We're looking at historical volatility. So that's the underlying volatility. So how volatile in this case is SPY stock, right? The shares. And we're actually only in the 8th percentile. So that means 92% of the time in the last 52 weeks, HV has been higher, meaning volatility on the actual underlying. So again, the shares of SPY has been higher. So what is interesting about this information I'm sharing with you highlighting this, Subi, is the fact that the VIX is higher today. The VIX actually gapped up. We're up about 3% on the VIX. You actually have a higher VVIX as well. But interestingly enough, now I guess it makes sense because the market did technically gap down. Interestingly enough, the volatility, or I should say the IV percentile and the HV percentile are both lower on the SPY. So that is something where, again, if we're looking at risk on, risk off, that's something that piques my interest because it's telling me the market theoretically will be less volatile, or at least it is less volatile at this point in time from an option standpoint and from a price action standpoint. However, the VIX, which gets its value, and again, if you're new to the program, I'm going to teach you right now, how the VIX gets its value is from the spread in SPX options. So as that spread widens and widens and widens, that's how, so again, with a bid in the ask, where people are agreeing on what the lowest price they're willing to pay or the highest price they're willing to pay for an option, as that spread widens and widens and widens, the VIX gets larger and higher. It increases in time, right? So there's an interesting conundrum there because the VIX is theoretically suggesting that there's more volatility, right? Because SPX options have a wider spread, theoretically. However, the implied, the IV percentile and the HV percentile on SPY is lower. So that, in my opinion, is very conflicting, which could suggest, theoretically, that there could be how do I say this? People are probably hedging. Theoretically, they're preparing for a more volatile move. If we're seeing the VIX up, if we're seeing HV percentile down, and we're seeing IV percentile down on the SPY, theoretically, the only logical answer, especially with VVIX up, would suggest that volatility longer term, meaning not like today's volatility, just on 0 days, but further out volatility is actually expanding a bit. So there could be a scenario in which people are starting to hedge right now. And what the other part that's important is that today is the first day of this new OPEX of October. So seeing if volatility, and I'm going to track this now very closely. Thank you for bringing it up. Seeing how volatility is sitting today actually really piques my interest in compared comparatively speaking, to what the SPY's doing today. So this is actually going to be a very interesting time. And this is little things like this is what I look for in terms of determining if the market is actually moving in a more risk-off direction. So this is actually really conflicting information when we look at our other Mag 7 names as well, which again, I'll highlight. Most of them are leaning more bullish than bearish, but there is a scenario in which they can push bearish as well. So there's a lot of conflicting data right now, at least right now in this moment in time, which would led me to be more careful near term being the next 1 to 3 weeks. And I want to very carefully watch VIX, VVIX, and see if the IV on the 0-day contract starts to expand. Even on the one, let's actually check Friday's contract. See how at the money IV is chilling on the Friday contracts. It's still low, 11%. That's very interesting. I appreciate you bringing that up because that did pique my interest. Things like that, like I probably would have noticed at some point today, but things like that are what makes me go, maybe I should be a little bit more careful, especially if I'm day trading. Maybe I should be a little more calculated, tighter stops, etc. When you see things like that, especially when we get some level or had some level of a divergence here between IWM and the Qs in the open. Now it's looking like we're all kind of on the same page, all things considered. IWM backtesting that key LOI here around this 242.36 area, now tapping the 200 MA. Also just had really big volume here just before that. So keep a tight eye on this. Very, 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 very interesting. Cody says, who has fun while making money? Sounds terrible. Man, most people who hate their jobs. I love my job, and I love... Honestly, in another life, I was probably some level of an entertainer, and you could probably dig up, I have an old YouTube channel and all that stuff. Like, I love, like, making videos and, like, being a podcaster. Like, I love being some level of entertaining because I see other people do things. I'm like, God, like, this sucks. Like, who wants to listen to this? Like, you are not talking for 5 minutes and you're staring at a chart. No one gives a fuck. Sorry for the language, but no one cares. I don't want to just look at some dude staring at a screen and be like, oh, I'm up 1%. Like, yes, okay, there's points where I'm going to trade and I'd be more locked in, but even when you're talking about things, you can make, this is a very boring subject. We are looking at red and green lines on a black chart, and I've got at least 100 of you locked in right now with me because what I'm saying has some level of fucking, sorry again for the cursing, but has some level of like energy behind it where you're like, wow, I can listen to this. It's like watching Bill Nye the Science Guy or watching the dude who just like plainly talks about how physics works. Like, you would probably like to watch Bill Nye the Science Guy because he's interesting, right? I'm trying to make these red and green lines on a black background as interesting as possible. And at least with some inflection in your voice, you can make it fun. Damn. So we like to make some money here. I like to share some stories with you guys. We like to keep it light and entertaining because this is a very stressful job. And if you take it too seriously, well, you do have to take it seriously. If you take it too seriously, I promise you're going to put yourself in an early grave. I have a few people who have legitimately had heart attacks while trading because they're that stressed, they over leverage, whatever. And my goal is to not do that for myself, but also have you guys not do that to yourselves either. And hopefully you get that out of this program. Messi in the chat says, this is why I have a notes app open for your streams. Thank you. You're welcome, man. I'm glad you're taking something away from it. That's the whole point of the show. You guys learn something. And even if you don't understand, you can always ask questions, or what we're talking about today, you can use that and go back in time, or at least in the future, and use exactly what we're talking about today, because it's just as applicable in the future as well. These are the things you want to look out for in general. And as you can see today, so far, I have not taken a trade. We are in our window of opportunity, though. Let me double check no one's talking still or anything. But we are in our window of opportunity where I would look to potentially take a day trade if anything looks too great. Now, nothing has looked too great so far, with the exception of those Apple puts, which I did not take, and I'm happy I didn't take because here's this green candle. When I was contemplating it, we were down here, and that's why I didn't take it. I didn't have enough confidence. Don't take the trade. That is actually a very expensive lesson. Let me teach you guys something real quick. I've done this now for 14 years, I think. 13 or 14 years now. The best lesson I could teach someone about trading, if you have any doubt in the back of your mind, just don't do it. There'll be another trade. There'll be another thing. You need to have full confidence when you're executing a trade. If you doubt you, at the end of the day, it doesn't matter if you're following someone else's trades or you took someone else's analysis and you liked it or whatever, or you see something on this program that you like, whatever, right? But if you don't believe in the trade and you don't have a thesis, or you don't agree fully with someone else's thesis of a trade that you're like iffy about, whatever, don't take it. There'll be so many more trades. Trust me. Every single day there's fresh opportunity in the market, but don't take those low confidence trades. The only time you'll ever see me take a lower confidence trade is if it's on light size and the risk reward is like fantastic, where I'm risking $20 to make $200, right? Where it's like, this is like kind of a crapshoot, but I can do it with 60% confidence, and if it works out, I'll make a lot of money. You could do that, but most of the time you don't want to do that, and it's not even because you'll lose money. It's mainly because you'll damage your mental capital. I don't think anyone else, and you guys can correct me if I'm wrong, maybe you guys follow someone, and if you do, please let me know who you follow that does this. I don't think many, let me use that word instead. I don't think many influencers that talk about trading or finance, whatever, talk about the mental capital it takes to trade. It is excruciating. This is one of the hardest jobs I will say on the planet. Now, you're not out in an oil field or you're not a construction worker or whatever, and those are harder jobs for other reasons, but it is very mentally taxing. And when you make one bad trade, and you guys can let me know in the chat if you disagree, I'm sure a lot of you are going to agree because we've all been there. When you make one bad trade, even if you only lost like $10, the effect it can have on you mentally to kind of just ruin that confidence can pass on to those other trades where then you go on tilt, you over leverage, you just make silly decisions, and you don't want that, ultimately. So the reason why I'm saying this and why I like to pitch this program as a risk on versus risk off and not a bull or a bear thing is because I want you all to think of things in that term, because it protects your mental capital. And if you got your head screwed on straight, you're going to make great trades. If your head's not screwed on straight, you're going to make a boo-boo. And even if you're right 99% of the time and you're wrong 1% of the time, that 1% of the time you make a boo-boo, you go on tilt, you full port, and you lose everything. And you say, you might be listening right now and be like, that's not me. Listen to me. If you're listening to me right now, you're lying if you've never blown your full port. You're lying if you've never lost like over 50% of your portfolio in a bad trade. You're lying. Unless you're like a long-term investor, and then you maybe not. But if you're any sort of an options trader or a swing trader or a day trader, you are going to be a liar if you tell me you've never lost like at least 50% of your portfolio in one shot. Because it's happened to me. It's happened to me 3 times. Okay? And I've very publicly said that. Because it's human nature. And a lot of trading is going against our human nature. It's going against things. Because at the end of the day, we all want to make more money. We all want to make that money as quickly as possible, when in reality, the best moves are to make in general are to be consistently realizing those gains as you go along the way and compounding those gains. And I'll let you guys in on a little secret. I've been building and building and building and building a very specific strategy that I'm going to share specifically with the members in our community, our Discord, that is geared specifically to newer traders that works against this mindset. And it's not ready yet because I'm using myself as a guinea pig. But it prevents all these things and actually still allows you to get the endorphin rush from getting a big trade, right? I'm preparing something that I've gone back and forth on, I fool you not, for the last 8 to 9 months. Testing and testing and testing. When I'm ready with that, if you're in our community, I'll share it with you. Maybe I'll do it on the live here. I'll share a little bit. It's a very, 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 very simplistic program I'm putting together. It's not an algorithm. It's not something you're going to buy. It's literally directions. And if you know a little bit about trading and you have issues with the mental piece, I'm very excited to potentially bring this to the forefront. But I need to be able to show for it that it works. And let me put it like this. I'll give you guys a little sneak preview. I'm on the 4th iteration of this. And I have successfully turned let me look at my log. And this isn't me patting myself on the shoulder or anything. This is like when a mad scientist builds something. Oh, it broke. Let me build it again. Oh, it broke. Let me build it again. I successfully moved $300 to a $300 portfolio up to a $650 portfolio in a period of 15 trades. No full porting, no 0-day contracts. Mostly, if anything, they were like weekly expirations. risk managed the whole nine. And I doubled up the port in 1, 2, 3, 4, 5, technically 6 trading days. 6 trading days and 15 trades. I've run Monte Carlo simulations, which, if you don't know what that is, it helps you determine standard deviations of success, essentially. I've crunched all the numbers. I'm very excited to bring this to light once I can prove that it can do exactly what I want it to do. So if you like the program and you guys are here, do me a favor, and if you haven't already, like the show wherever you are watching on X, YouTube, wherever. Drop a hi in the comment. If you haven't, drop a comment, retweet it, whatever. Share it along, because stuff like this I'd love to talk to you guys more about, but I do need a little bit of that algorithmic love. A little bit of love for the algorithm. So if you enjoy what you're hearing, do me a quick favor, interact anyway with the show. And if you haven't already, go over to the YouTube channel, hit subscribe. When we hit 500 subscribers, this will be a daily show. So if you enjoy the show, you enjoy hearing my ramblings, if I bring any sort of happiness or light to your day, that's all I ask for you is a cheap subscribe. It's free $99, $0. All you gotta do is hit that button. And like I said, once we get to 500 subs, it will be a daily show. Thank you for your support. All right, guys, we're going to do the roundup now because I'm getting hungry, as I normally do, because I'm typically up at 4 a.m., and today I was up at 4 a.m., so, okay, SPY's starting to move. Maybe we won't do the roundup just yet. SPY just got a little bit of a pop here as I'm talking about that. Hey, T-Burn, you're Tom, right? Because I wanted to shout you out as Tom. I'm pretty sure you're Tom. Tom dropping the crown in the chat. That's what's up. Double check. Okay. No news on this little tiny, nothing crazy, but a little bit of a tiny pop there. Q's making a pop to the upside as well. IWM, see, it's not that great. Ooh. Okay, if IWM stays under 242.39, this is a short setup. We wicked it on this 5-minute. If we back test it and stay underneath it again, I will short IWM. I might take a stab early. We'll see. I don't prefer, so if I am trading an index, I don't like trading IWM versus SPY or the Qs, mainly because the liquidity in the contracts is a little less, it's a little less liquid in general, unless you're trading zeros. And because of the day and what we talked about, volatility and everything, the fact that it's a Monday, it's the start of a new OPEX, I don't want to take a 0-day trade today. Just the risk isn't worth it to me. Right now you're moving up. We're almost to the LOI. You got the 200 MA here. You got that red SAR there. Your MACD's curling up. So if the bulls were to reverse it, they reverse it now. If they don't reverse it, meaning we don't break through this LOI, or it's on lower volume, we leave a wick, I'm going to enter short. Its low day is at 241. Let's look at... I took an early stab here at 88 cents and then 85 cents, but I'm not alerting it yet because it could fail, but I did take a few out. You do with that what you will. I will tell you if I'm alerting it, if you like that idea. See, now I'm quiet because now I'm thinking and watching in real time. Now that affords the quietness. So if this rejects here, you got a decent downside move on these 242s. High day on these 242 contracts. 155. Entering right now at an 86-ish price. You're getting at least 100% here, right around 100%. All right, I'm grabbing some officially now at 85 cents. Where is my... Let's go back to the chart. Where'd it go? There it is. So this is risky because we haven't fully rejected yet, but it's showing signs of it. Oh, I gotta type that out. IWM tomorrow. Whatever. 242. Put at 0.85. It's very rare that I miss specifically a short on the index. So you guys understand, I started tracking this in 2025. I've taken 139 index shorts this year out of my 626 trades, total trades. Of those 139 trades, hold on, I'm going to do the math here. 127 were successes for a 91.4% success rate on shorting the indexes specifically. This is the kind of thing I'm looking for. The other thing I'm looking for here is that the market's a little overstated. I mean, it's a hard push, right? It's bullish. It's just trending to the upside. If there is some level of a period of weakness here on the Qs or on the SPY, that's only going to add more bearish sentiment to IWM to push lower. If the bulls push it here and break over this LOI, yeah, I could give it a little bit of headroom here, but I'd probably want to close out, realistically. What I love about this is the 5 minute. So the 5 minute, we've stayed underneath this LOI for the last 15 minutes, theoretically, just about. Your MACD's flipping to the downside. You never pushed bull momentum on RSI on the 5 minutes, so it's actually been bearish. We actually rejected the 200 MA on the 5 minute, and you've got this green star here. So what this all indicates to me, and right now we're on the POC on the 5 minute, break the POC, break VWAP. If you break through this red star, everything flips bearish. You're going to gain more bear momentum on the RSI. Your MACD is going to flip more bearish. If you break that SAR, you're more than likely going to low a day, like realistically. However, short term, you are holding bear momentum for now. However, this MACD is a little burnt out, so a period of consolidation here to line up with the 5 minute chart would make some sense before going lower. So it's, again, it's a little bit of a hard read. It's not super clean, but at the price and what the, again, the risk to reward here is about, you know, roughly 100% gain. We get back to lows where I'm risking realistically maybe a 10-15% loss. That's pretty solid. That's a trade I'm going to take. And it's a little, like I said, it's a little ballsy, mainly due to the fact that the market's hot, right? SPY's just grinding up. Qs are grinding up, but also, actually, I didn't even put a line here, 66455. The market's only 50 cents off all-time highs. And not saying you should short the market at all-time highs. I'm just saying people do. And it's a logical point where there would be a rejection after a trend, right? People would just go, oh, yep, we hit the highs. I'm going to sell some or whatever. I swung over the weekend, whatever you might do. It's a logical point in time where some people would either take profits or open a short or something, regardless of a hard trend. It's an all-time high for the overall market. Few people are saying, like, get in now, unless, again, we break with high volume. Right now, those contracts are trading 89 cents, so I've got a small gain on them. Nothing to write home about just yet. As I said earlier, NVIDIA is going to sit in this range mostly for the whole day. I'm pretty confident on that. I don't really foresee it moving out of this like $1 range today. You could scalp it up and down if that's really your style. It's not mine, so I'm not going to. Microsoft. Ooh, it got close. Like I said, that 511 area is where I want to get the scoop up along, and it only got to 512.55 and got a little bit of a pop there for a few bucks. Apple's looking a little tired. Now, it did break the monthly SAR, which is a great sign. But again, I will remind you on this daily chart, realistically this week, right? It's not today, but this week, this gap really should fill before getting a leg higher. Meta's kind of grinding to the downside, tapping the 200 MA here on the 1 minute. A little bit of a tweezer bottom potential here on the 5, so you might see a little bit of a reversal come out of IWM. I'm sorry, out of Meta. Google, not much to write home about, literally flat on the day. Tesla. Wow, Tesla's been remarkable. I should have longed it after the 360 break. I said I was always bearish under Tesla under 360, broke 360 and went broom. Ah, damn it. Okay, so I want to highlight this even more. Even though the market is continuing to push higher, look, we are only 30 cents away. That move is not supported by IWM whatsoever, at all, period. This is a repeat of Friday, and I was on the wrong side of the trade on Friday, where I was trying to long IWM, and it was wrong, and I was wrong. We've wicked this key area of support and resistance now 1, 2, 3, 4, 5, 6, call it 7 times in this little period of price action. So we formed a tight range here. If we break VWAP, and now you've got even more confluence here. If we break VWAP and now we break the 1 minute green SAR, you're more than likely breaking the SAR on the 1, on the 5, confirming a MACD flip to the downside with continued bear momentum. This is going to flush hard if this breaks. So basically look at this low here as your trigger. 242 even. If 242 even breaks on IWM, we are flushing to the downside. At least we're getting to low a day. 90 cents realistically. It's going to drop. It will drop. It's very rare that I speak in certainties like that. Got about 3 or 4% on these. Nothing crazy right now. Trading around 92 cents a contract. Just hugging this VWAP here. Actually, you know what we should do while we're kind of waiting for this to play out? Because I was going to take off, but I saw an opportunity, and that's why we took it on the program. But do you guys have any questions about this trade? I like to talk through things, and if we can focus on one trade at a time, I think that's the most educational and beneficial for you guys. So if you have questions, please ask. If you understand it, let's get some... If you understand what I'm looking at here, drop a thumbs up in the chat. You get it, you like the thesis, you like the trade, whatever, you understand what I'm looking at. If you like it, drop a thumbs up. If you have a question, ask a question. If you hate it, here, let's do this. If you hate it, drop a thumbs down. You think it's a dumb idea? Thumbs down me. So far, we got about 11% on this trade thus far. So for a smaller account, you can take a few gains off if you like. What I'd kind of look for, like double confluence here, if the SPY tapped all-time high, wicked down, and came down sharp as IWM was breaking 242, that would actually be like primo timing. Like everything would line up real nice. Now you are seeing the bulls kind of defend here around the VWAP, which makes sense. I personally don't use VWAP, right? I shouldn't say that. I don't use VWAP as a means of, like, including it in my trading strategy. I use it as a means of understanding that other people are using VWAP. So keep in mind, like, a lot of algorithms, a lot of traders are looking at the exact same lines on the chart that you are, right? So certain things get more weight than others. For me personally, I think VWAP's not a dumb indicator. I just don't like to use it. I would prefer to get similar results from the volume profile, because I think the volume profile is more telling than VWAP for the same logic that people use VWAP. But I understand that there are many people out there using VWAP. Maybe there's many algorithms trading off the VWAP level as well. And consequently, it'd be silly of me to ignore it. But it just takes a lesser grain of salt in how I trade, if that makes sense. All right, SPY, here we go. We either make a new all-time high or we wick and reject. Again, 242 even is our trigger on IWM. In a perfect world, we tap the all-time high, we reject hard. That rejection pours bad sentiment short term. Bad sentiment breaks 242. We flood to the downside. That would be everything lining up perfectly. QQQ just made a new all-time high. That old all-time high was 599.36, which I forgot to put a line there. 599.36. There we go. Okay. Here we go. A few more shekels. Few more shekels. Remember, NVIDIA's in this pretty tight range, so this actually supports the thesis that NVIDIA's pushing up right now, because it more than likely will come back down, which is good in this scenario. SPY is only like 6 cents away from a new all-time high. Wow, Microsoft, nice solid move. A little salty. I said 511, not 512, but it's okay. Apple needs a little bit of a reset. Meta so far defending off that little tweezer bottom with the 200 MA. It's not out of the woods yet. Could get out of the woods, but it's not out of the woods yet. Google, pretty non-consequent, very like flat. Tesla, a little iffy here on the POC. I don't think I looked at Amazon at all today, actually. Oh, not bad. I mean, you know, kind of forming like a pennant here, but not awful. Not fantastic either. Let's check out my boy SEMR while we're waiting here. on IWM. Now, this is one I brought up on the program with you guys in the past. This is like a solid knife catch name. We talked about this on a Big Money Monday. And essentially, all-time low here is at 701. These are the kind of things I look for, digging around the garbage. Look at these wicks here. These are monthly wicks. In 2022, and through 2023, an area where people are just buying up on the downside here. So if you haven't, take a peek at SEMR. Decent risk-to-reward profile here. You could risk a new all-time low. And even with it, I mean, I've watched this back and forth for like 7 to 8% pretty quickly. It's a solid name. Ooh. 4 cents off an all-time high here on SPY. It's getting close. It's getting close. The Qs are very strong right now. That only tells me they got to cool off a little bit. I just need a little bit of bear sentiment to come through. And then this is getting shot through the foot. Shot through the heart, and you're too late. Great, I'm going to get copyright claimed because it sounded so accurate. I'm looking around to see if there's anything else before because after this trade's done, I'm hopping off and I'm making myself a delicious burrito. That is what is on the schedule for the rest of the day. Okay. Are we there? We are almost there. 2 cents. We did not tap it. IWM getting some volume here, so you could get some level of potential reversal here as the market's at highs. Call them balls and strikes, guys. We'll see. The market is essentially at all-time high. We are about 2 pennies off. It's like walking paint dry. It's actually no one even sitting on the ask right now. You'd think there'd be like a big wall or something, but no. Not at all. We have officially tapped all-time highs. Will it break? IWM getting a little bit of a rebound. So that's helping support the move here, at least at this juncture. Nice little 3-candle move here. So you kind of have like a double bottom here on IWM for now. But you are still sitting within this range. Yeah, you're in a tight range here. A very, very tight range. But as time goes on, as long as it is sustaining underneath this 242.39, it will eventually fire to the downside. Especially the longer it stays range bound here, the more it's actually gearing up to push even lower. But again, it could break right now. It could wick above it, close down, like anything can happen. Just call them balls and strikes, like I said. We're going to call it as we see it. You may have a short-term reversal here on IWM. But not dead by any means. At least in terms of the trade is not dead by any means yet. New all-time high on the market. Some of that's perpetuated by IWM getting a push here on pretty good volume. Going to tap the 50 MA here, see if that catches it and pushes it back to the downside. Again, I'm looking to risk about the POC up here. So we'll see. You got 4 minutes of grind here to the upside. SPY is just slowly melting up. Finding a little bit of trouble here at all-time highs. IWM currently rejecting right on the 50 MA. How's volatility? Volatility slowly grinding to the downside while VVIX is flat for basically the whole day. NVIDIA is at the top of its range as well. So we should see some level of rejection here unless there's a big step in, big push or news or something. NVIDIA really shouldn't be much higher today. Not that I necessarily want to short NVIDIA, but it shouldn't be much, much higher. Microsoft's looking a little overextended on the intraday as well. Apple a little bit too. Meta might break this to the downside. That's not going to be good for sentiment. Probably drop $3 or $4 at least if this breaks here. Google looking a little. Anytime you see like a rounding off, so anytime you see like kind of like a lowercase n, you want to pay attention to that for a potential reversal to the downside. And that's kind of what you're seeing right now on Google, like a rounding off. Amazon tapping the 200 MA there. Look like you kind of have another like rounding off right here. This is another one where you get a big candle down. I hate bear flags. I think they're silly, but if you get a big candle down and you get like again a lowercase n, so a rounding off where you pop up a little bit and you start coming back to that low again, like we're seeing right now in Tesla, that could be a decent bear move as well. I'm not looking to overload on the short position right now because I'm already short IWM, so I'm going to ride that out for now. Right now, we're tapping the POC here on IWM. This is too frothy. This feels like someone's going to say something. This is going to get shot down hard. The price action's slow and plodding, and that's always sketch to me. We don't have someone else speaking until noon, so there's a world where this just grinds up till noon. Good. IWM rejecting POC right now. So really, I want to get, again, back under this LOI for more validity on the trade. This actually isn't the worst thing. So when you get a big pop on volume like that, this could also be sweeping liquidity for the upside before firing low, depending on how the next few candles work out. So it's not like, again, the trade is completely dead. It's a matter of, again, being underneath this POC as a terms of risk. Getting back under this LOI reaffirms the trade, especially if you get a pop-up and a rejection, especially on like a 5-minute chart. If we leave a big wick, that is a sign of clear price rejection. So that's another minute left on this current forming candle. So we'll see how that plays out. Grab looking pretty good, back to almost 650, which, again, I don't really want it this high yet, but I'm not going to be mad at it. SPY is just grinding slowly on decent volume for all things considered. It's not like dead volume, but it's okay. It's a little low for being at all-time highs, but it's okay. It's not bad. IWM trying to break the POC here. Got about 30 seconds on this 5-minute candle. You could tap the 200 again before rejecting. You had good volume come in here. So this could be a base and rejection back to the upside. Or I should say rejection for the bears. Oh, there's your first little red boy on the SPY. And on the Qs. And ironically, IWM is getting a little bit of a green push. I have pretty high confidence this is going to pull down. So I'm going to be patient on this. We're actually not even that far extended right now. Contracts are trading at around 70 cents. So, what is that? 73 cents, sorry. So that is currently, just drawing it here real quick. It's like a 13% drawdown so far, so it's nothing. And again, that's the risk to reward. So I'm looking at like, I wanted to keep it like between a 5 to 1. So if I'm looking for about 100% gain, I don't really want more than a 20% loss, theoretically. So, and there's times like specifically with IWM specifically when you, or I should say, there's times when you're trading IWM specifically where IV on IWM contracts, especially 0 days, can decay really quickly if it doesn't go anywhere because IWM tends to be more erratic. So if you do trade IWM contracts and you're not used to trading IWM contracts, you do want to keep an eye on your IV. Now, when I got into this one, the IV was around, I think it was 1780. And currently right now it's 1771. So the IV is holding all things considered. But if the IV starts to drop off because price action is just kind of muted, regardless of if the trade's valid or invalidated or not, I want to keep that as a potential risk factor if IV starts to trade off to the downside because these will just lose value because they're losing value. Right, which we don't want. Wow. To 665. Boom, 665 on the SPY. Wowzer. Wowzer. Volatility is kind of trying to drop off to the downside. All right, I'm going to do a quick little roundup, guys. And then I'm going to hop out of here. You guys know the game plan here for IWM. And if you're in the Discord, I'll walk you through it still. But if you're a much smaller account, then again, keep your risks, like I said, 5-1. Maybe don't go lower than like 68, 65 cents if you want to be like really risk averse. And then look for a break above 155 on the lower day sweep. So assuming we break this, we move lower, we get a sharp move down, you want to be north of $1.55. These are basically at the money, so you have a little bit of flexibility there. And just also watch your IV. IV right now, or at least when I just looked, was at 1771. It's right now 1773. When I entered, it was like 1780. So IV's holding pretty steady. But you're going to want to watch that in case we just kind of, fart around. We don't go anywhere. That IV could decay. And also, conversely, if we do get a sharp move to the downside, that IV expands rapidly, you're going to want to try to capture some of that and get some extra profit. So keep that in the back of your mind. Anyway, as foretold by the oracles, NVIDIA is not really going to break out of this range today. That is me, the oracles. And you saw high day rejected and now getting more rejection here on NVIDIA. You will not get much higher today unless there's news or something, which we do have some Fed speakers coming up, so there's a possibility. But there is, technically speaking, a very low probability NVIDIA breaks high days and just gets a hard rally or anything, today at least, right? Microsoft not looking too bad. Got a solid rally off that 512. I think this one's going to sit around this 515 by the end of the day. It's not going to really go too much of anywhere either. But also not necessarily get like super bearish. Again, barring any news event or anything like that. Apple's impressed me so far, and this is why I did not take that short. Apple is basically putting the market on its back. I will remind you that I do think at least before the end of the week, this gap has to fill. That may not be today, though, so keep that in mind. What I will tell you to do is watch volume by the end of the day on this candle and see how it compares to the last candle. That Friday candle was a lot of volume. You got 163 million, a lot of volume. I don't anticipate this candle to have as much volume, but I would look for somewhere in the neighborhood over, like, if the candle closes like this, you want it to be at least like 50K. I'm sorry, 50 million. There's the word. You want at least like 50, 60 million on this candle if you get like a more bullish candle. If the volume's low and you close up here, that could be an indication that you might get that move down Tuesday, Wednesday. Or again, obviously, if the candle shape moves down and changes, it's not this Marubozu candle right now, which a Marubozu is a candle with no wicks on either end. If it's not this kind of candle, obviously that can change throughout the rest of the day, but on lower volume today, right now you're at 32 million, so you're more than likely going to tap 50 million pretty cleanly. I would just watch this very closely, how this closes today. Especially if you trade the market, it might give you an inkling on how things may look going forward. Looking at Meta, trying really hard to defend this 200 MA on the 1 minute, and the 5 minute is trying to reverse. I would not long Meta unless we're over like 783 with volume, which it could actually happen here very soon. I would just take a step back on that just because of where the Qs are sitting. May not be the best idea. Google, again, still very surprising. I think this one closes the day around like 253, 50-ish, somewhere in here, realistically. So I would expect a tiny pullback on Google. Not like I want to necessarily short, but something like that. And Tesla, I would lean more to the downside around like 440, not much, like 440-ish, 439, unless it defends like 440, 50. So very tight here. But not going too far of anywhere. So ultimately, I don't really see the bigger names going too much of anywhere. Amazon's getting real tight. You got, again, my favorite thing, a sandwich forming here against the 200 MA with your short-term EMAs. I would just exercise an air of caution because today's the first day of a new OPEX, because SPY just broke a new all-time high on, in my opinion, less than convincing price action. I hate when price action looks like this, and it's just like it's like climbing a stair, like a bunch of stairs. I don't like that typically. I also don't like that IWM isn't following the trend, and I'm, as you know, I'm exposed to IWM not following the trend and continuing not to follow the trend. And also volatility, although moving lower, still gapped up, and it's still sustaining some level of its gap. Even though the market has gone green on the day and broken a new all-time high, the VIX is still expanding, or not expanding. It's stationary, right? So that is alarming from a risk standpoint. So what I would leave you guys with today, I would err towards the side of being risk off today, unless you're trading individual names with volume, Or, if you do take a trade, like I'm taking IWM, the risk to reward makes sense. Where in this case, I've got like a 5-1, right? I'm looking for the low a day sweep here, and theoretically that gives me at least like an 80, 90, 100% return, and if the lows break, even more. So the risk to return makes a risk to reward makes a lot of sense to take a stab at that logical point in time. So that's kind of my take on everything for the rest of the day. If we see SPY break under the old all-time high, watch volume very closely, because you could sweep and then get pushed down pretty quickly. But it's just looking like we're just going to slowly climb up. And I'll tell you one thing about me, and this is a personal flaw I know about myself. I suck on trend days. If the market just goes, suck at it. Mainly because I'm a reversal trader. I trade the reversals all the time. I'll time the highs and I'll get the reversal. I'll time the low and I'll get the reversal. I hate when the market just does this, because it makes it very, very hard for me personally in my trading strategy, which has over a 90% hit rate for me, does not work, because it goes against the theory of, or not the theory, but the thesis of market reversion, right? Things revert back to the norm. They go back to the middle, and it just goes against that thesis. And also, trend days, I believe the statistic only happens 7% of the time. So it's not that they're impossible, but especially on today, knowing what today is and what Friday was, I just find it a very, very low probability of a continued trend day where we just ride the AEMA all the way to the upside. Now, if I'm wrong, my equity will be very happy. And if I'm right, then I'll make a great options trade and I'll make lots of money. So either way, it's a win-win. It's just a matter of not overexposing myself on a day like today. Me personally, and this might be applicable for you. If not, it's fine. But not overexposing myself, because I know that is not an environment that I particularly do a good job in, typically due to the fact that I don't like to get on a bandwagon and just ride. And that's just me in life in general. Like, I don't like to just follow what everyone's doing. And when we trend one way, it is simply following what everyone's doing. And that's not my cup of tea. So that's just me. Anyway, that's going to wrap it up for the show today. I think I'll do a show tomorrow. I'm going to be better about getting a schedule out. Things have calmed down a little bit here. They're going to get hectic again in a few weeks, theoretically. But things have, in the near term, in my personal life with everything that's going on, have calmed down. So I should be able to give you guys some level of a schedule, at least a week in advance or so. So stay tuned for that. But I should be able to go live tomorrow, and then looking like Thursday or Friday. I'm trying to give you guys at least 3 lives a week. It's just, again, being transparent. Got to manage what's going on in the background, and I don't want to ever come to a live stream and not give you guys like my full attention. So when I'm doing a live, I want to be here, I want to be active, I want to be talking to you guys and give you my full undivided attention, and that's what you always get right here on the Atomcash angle. So some will say you might need an edge to trade. Well, I like to look at things from a different angle, and that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys. Trade smart, and remember, precision beats prediction every damn time. I will see you all tomorrow at 9:15 a.m.
The time has passed, and that's a wrap.